Okay, good afternoon, everybody, and thank you for joining this webinar presentation for Tesoro Resources. I'll hand you over to Managing Director, Mr. Zeff Reeves, to walk you through the presentation regarding the maiden resource estimate for the Zorro Gold Project. Thanks, Zeff.
Thanks, Peter, and thanks everybody for logging on, taking the time to get this update, and hopefully can explain a little bit more on our maiden resource estimate that was announced yesterday to the ASX for the Zorro Gold Project. So we have obviously been working very hard over the last 18 months to find the TERNERA deposit, and this photo on the front of our presentation is a photo looking north over the main TERNERA central area. And when you look at this, you can see the amount of work that's been done. We've drilled over 60,000 metres of drilling in 18 months, and around 48,000 metres of that's gone into this maiden resource estimate. We're continuing to drill there with 6 drill rigs 24/7, and essentially this is an outcropping ore body. This ridge here is essentially the main Zorro tonalite with gold mineralisation in it, dipping back to the east underneath these hills. TERNERA East up the back here, you can see a track right in the far right. That's a new discovery there that sits in the hanging wall of TERNERA, and Drone Hill to the left, which is potentially a footwall repeat of the main TERNERA deposit. We've drilled 1 hole into that with positive results, and we're hopeful we'll pick up some more resources there going forward. So usual disclaimer. So just a quick summary of, I guess, where we've come from and where we are today. So we relisted via an RTO back in February 2020. We've raised a little over 31 million since then. We're still well funded, currently around 13 million in the bank. We've been able to be very efficient in our expenditure, with the majority of our funding going into the ground, and that's allowed us to efficiently deliver 61 kilometres of diamond drilling into TERNERA and deliver that maiden resource of 660,000 ounces. That's at a 0.3 cut-off grade. Deposit remains open in all directions, and our discovery cost per ounce is only $21 per ounce. So that's really in the bottom half of discovery cost per ounce for companies listed on the ASX. So a very efficient deployment of capital. We expect that potentially to further reduce as time goes on. We get more effective in infill drilling and so on now that we have this maiden resource out. So this is our table showing our maiden mineral resource. You can see there that we've reported a number of different cut-offs, so 25.1 million tonnes at 0.82 for 661,000 ounces, and a highlighted number there, 15.4 at 1.09 grams per tonne for 540,000 ounces roughly. So this resource was done into a pit optimised shell, and just a couple of quick comments on that, on the parameters that went into that optimization. I know, and I've received numerous messages around the gold price that was used to generate that pit optimized shell, and it's important to point out that that gold price has nothing to do with the cost of building a gold mine here. That doesn't reflect the cost of gold that is going to be needed to make this deposit economic. That cost of gold was simply selected when we ran a number of different optimizations at various gold prices to get what we believe is going to be around what the cut-off grade for a mine here is going to be able to produce at. So with the work that we did, looking at the grade tonnage curves of the global resource, so not constrained within a pit shell, it looks as though with our metallurgy as well that the cut-off grade will be around a 0.3 grams per tonne cut-off grade. So what the engineers did is they just generated a whole bunch of pit optimizations using different metal prices to achieve a result whereby we can constrain all the blocks or a majority of the blocks in our resource estimate that hit a 0.3 gram per tonne cut-off grade, and that's what was reported in that table. So it's just an arbitrary figure. It has nothing to do with the profitability of a future mine. And perhaps if people looked a little more closely at those pit optimisation parameters and take a look at the cost, which you actually build up a very good database of, we're actually looking at costs potentially of sub $1,000 per ounce production costs in the parameters that we use. So they're still very early figures. They're not ready to even be used in a scoping study yet. So I'll just caveat those numbers around that. We're doing work on all of that at the moment. And I would expect the next iteration of a resource upgrade to have some tighter figures in there around what it will cost to operate a gold mine at our Zorro. But at this stage, it's looking like it's going to be a fairly low cost operation. So the other positive thing, and from an open pit mining point of view, the vertical ounces per metre through the deposit are quite attractive, ranging from 2,000 to over 3,200 ounces per vertical metre. So with a high metallurgical recovery, outcropping gold ore body and that type of ounce endowment through the deposit, it's starting to look quite attractive. So this is a view of the block model within that pit shell. And so these are blocks over 0.6 grams per tonne. So when we go back to that resource classification, you know, the average of that material is going to be well over a gram per tonne at a 0.6 cutoff. But this demonstrates the continuity of those north-south faults holding a lot of good high grade. They're open in all directions. You can see the pit shell on that diagram there that was used, that captures all of that material. And the other important part of this image is the amount of drilling that is actually still not being used. So these holes here sit out on the western and to the south of the deposit. They haven't been used in the resource estimate, these green holes, and a whole bunch of those green holes up in this area further defining this fault. And we've got the holes out at TERNERA East, which haven't been used in the resource calculation either. So we've picked up that mineralisation recently in TERNERA East. Obviously, it's going to have a material effect on how a mining operation might look here as it's up in the hanging wall and has the potential to significantly reduce stripping ratios. But basically what you're looking is an ore body that's at surface, there's no overburden, multiple repetitive higher grade zones within it, open in all directions, and potential to further reduce stripping ratios as there's what we would call mineralised waste, but there's a lot of gold grade through that mineralised waste as well. So combined with that good met, we're starting to look at a fairly low cut-off grade operation for potential mining, and that's what we'll start to see emerge, I think, as the year goes on. Obviously, having the modelling work done has identified a lot of material that we think has got the potential to be upgraded into another resource expansion going forward. So we used 148 holes in that initial resource. We've now drilled around 204 holes, I think. So a whole bunch of holes that need to be included back into the next resource calculation, plus the drilling that we'll drill probably between now and September, October. Obviously, we've got a lot of assay results that are pending, so they'll start to hit the deck fairly soon. I would expect as soon as next week, we'll see some results come to us. But basically, we see some major areas that are highlighted on this section. Again, the pit shell shown in the pale pink, the block model in red of the high-grade areas, and these zones shown in the pink circles where we have been able to see that there's some good mineralisation there that we've picked up in the existing drilling, but hasn't been included in this iteration of the model. Had some more infill and data collection in there to be able to get some of that material into resource. but we're optimistic that we're able to convert a lot of that into potential resources going forward. So there's some real material exploration upside for TERNERA, and that's without including any of the material that we've started to see at TERNERA South and also at TERNERA East. So we can see a fairly clear pathway to a fairly major resource expansion going forward. So basically the focus for the rest of the year is continue that resource definition drilling to extend and upgrade the resources at TERNERA. We obviously want to improve the resource classification of that inferred material and get it into indicated for scoping work and so on, and continue to expand TERNERA. There's certainly some big zones of mineralisation that weren't included in this resource estimate, particularly to the south, and obviously we're optimistic that the TERNERA East area will add additional ounces. And we've also got some additional targets outside of TERNERA, particularly that Drone Hill area and up to Toro Blanco, where we're looking at closely now. We probably expect to drill a few more holes into Drone Hill fairly soon. And if we pick up additional mineralisation in the footwall of the main TERNERA deposit, obviously it's going to be quite beneficial going forward. We think there's potential for multiple intrusive-related gold deposits on this property. So wherever we see those host rocks, they're mineralised at surface. So the team's delineating further drilling targets outside of TERNERA. So I really just see this initial resource at TERNERA as being a stepping stone. It's demonstrating that we've got a quality ore body in terms of its dimensions, its potential scale, its metallurgy, and its ability to be able to add rapid additional ounces going forward. And really it is our aim to become a low-cost gold producer in Chile. So we're going to continue to do that work to define this project. I would expect a resource upgrade before the year's end. There's a lot of potential mineralisation to add back into the TERNERA model, which we've already picked up, but it requires further drilling to add in, plus some of those extra targets outside of TERNERA. We're hopeful we might get some of that in as well. And we're starting to build our organisational capability in-house. So we have a highly qualified mining engineer on board now, starting to pull together a lot of those engineering and cost information together, because we really do see TERNERA going into production at some point in the future. So the board and management and the team in Chile are focused on delivering that. So thanks for that taking the time to listen to that explanation around the maiden resource. So happy to take a few questions now.
Thanks, Zeff. We've had a few come through here on the chat. The first one from Chris, who says, firstly, I'd like to thank you for taking time to present to shareholders. I noticed that your presentation changed slightly on slide 4, removing the 250,000 ounces as unclassified resource. Was that the reason for the trading halt, that you weren't able to report on unclassified material?
Yeah, it was. That was overlooked, unfortunately. Obviously, in our modelling process, there's some criteria that are required to meet the JORC stand in terms of classifying it as indicated, inferred, and so on. But during that modelling process, we picked up a lot of material, which I intimated to when I was talking before, that is showing high probabilities that we're going to be able to get that into the next iteration of the resource. So we use that, I guess, as our drill planning work to be able to look at where we need to increase the drilling density to be able to get that material into resource. So, we've got a reasonable level of confidence that we're going to add some additional ounces through those areas.
Okay, thanks. And there's been some questions coming through about the US $2,500 per ounce price of gold used, which I think you've covered off. The misconception was that was the number at which the project would be economical, and I think you've made it quite clear that that's just part of the global resource modelling numbers done by the consultants.
Yeah, so probably just to clarify a little bit more, look, when you report a resource, there's probably two ways to do it. One is inside a pit shell that has got some high level economic parameters applied to it. And as I said, ours was really driven by what we think the cut-off grade could be at this project. It's got nothing to do with what we're going to make, what the gold price is going to be to make a profitable mine out of this. Or the other method of actually reporting this is just a global resource based on elevation. But one of the issues that we've got at TERNERA, if we were to report on elevation as an arbitrary line down, and I can point to a number of peers in the market which have reported global resources, and I would challenge investors to try and figure out exactly how much of their global resource is actually going to be recoverable in a mine. But they've reported a global resource on an arbitrary elevation. And so what we've elected to do, because of the topographical effects at TERNERA, and going back to our cover page here, you can see the sorts of hills that we're dealing with. They're not big, but they're quite steep, and they have a material effect on, if we picked a straight line as an elevation cutoff for the bottom of the resource and reported all the global resource above there, we might miss something. So we decided to run a pit optimization because that follows the topography, and it also allows us to pick up all the 0.3 material and report to that. So it's as simple as that.
And Zeff, that runs into a question here about what you expect in terms of recovery costs, and how much of the 660,000 ounces at this particular resource stage would be recoverable.
Look, it's way too early to speculate on any numbers around that. Look, all I can say is that, for example, this picture here shows the higher grade portions of those north-south faults. Some of the work that we're doing in the background is having a look at this at really high cutoff grades. So, and seeing what we're looking at. And for example, in those north-south faults, if we bump the cutoff grade, say up to 1.5 grams, we're still looking at 250, 300,000 ounces at around about 2.8 to 3 grams through those faults. So the team's pretty focused on, delivering more of that high grade stuff, because it really makes a big difference to what you're actually going to mine and generating early cash flows and all of those sorts of things. But you can see that high grade, that's sticking out at the ground. So that's this area here is that ridge line that I pointed to on the cover slide. They're well developed, they're open in all directions. So we're confident that we'll continue to increase that resource classification there in those higher grade zones. And we're able to then, I guess, tweak the economics of future mining operation in the scoping study and so on as those resource classifications increase, and be able to optimize this to, recover as much as possible. But certainly given the met and the geometry of what we're seeing, it looks as though you're going to be able to dig up a fair bit of this.
So Simon asks, if you run a pit shell at $1,600 US per ounce, what resource would you be looking at? Can you answer that?
I can ballpark answer it. So looking at this table, that at a $1,600 an ounce, it'd probably bump the cutoff grade up to probably 0.6, 0.7. So you're still looking at a resource of around 500,000 ounces probably, but at a much higher grade. So 1.2 to 1.5 probably.
You mentioned earlier that your production costs could be looking at sub US $1,000 an ounce. Based on the global cost per ounce, that would be quite well below the average production cost numbers. Is that the sort of number you see around Chile and that area?
Yeah, look, a lot of it's got to come down to metallurgy. So if you have a favourable met and you don't have to put so much power into grinding and so on, then certainly offers a major cost advantage. At the moment, looking at the cost to run an operation at El Zorro, power is likely to be one of the biggest inputs and one of the things that cost is most sensitive to. So we've got half a tonne of material in the met lab at the moment. So all the different ore types that have been identified to do some further met test work. But the initial met sample that we did mid last year obviously had a very high gravity component recovered, even at low grade, and a very low tails grade, which means that a lot of gold's getting recovered. So I think even at a fairly coarse grind size, we're looking at a 94% recovery. So that really drops down your production profile. And then I'm sure a lot of the listeners will be aware that, you know, Chile do open pits very well. They're highly efficient and they've got a very skilled contracting and workforce in open pit mining, including the professionals that run these types of operations. So the database that we're starting to build on costs around open pit mining in Chile is quite extensive, and we're really starting to see, you know, a differential between that mining cost for operating, say, in Chile as compared to even Australia.
Thanks, Zeff. Is the scoping study going to be based on the resource in this MRE, or would you use the resource estimate at the end of the year for that scoping study?
We will probably use an increased resource estimate for that scoping study. As I said, we're really trying to accelerate bringing that forward. I'd hope that it wasn't at the end of the year. So we're going to try and bring that forward, and we're going to also try to convert as many of those inferred ounces into indicated as the year goes on, which would then help us form the basis of that scoping study.
There's a couple of questions here which we might go back to privately, because I think they're just missing the mark a little bit. How confident are you, and you just answered this too, how confident are you on providing the next update to an MRE by the end of the year?
Yeah, as I said, look, we've got 60 odd holes in the lab now, really. So that's going to add significant amount to the next iteration of a resource expansion, plus the drill program that we've got planned really between now and I guess the end of September, early October is going to be about another 20,000 metres of drilling to include. So we'll take a look at all of that, and you know, something that we're very cognizant of and focused on is converting quite a bit of this into indicated, so then we can really sink our teeth into the engineering studies around scoping, feasibility and so on. So we'd obviously want to do that sooner rather than later, and I think given that our team's been able to deliver over 60 kilometres worth of drilling in an 18-month period, plus a maiden resource in a fairly challenging environment with the global pandemic on, has certainly, you know, gives us a bit of a look forward on what we're able to achieve in that time frame. So we'd hope to be able to do it sooner rather than later.
Zeff, TERNERA has been the main target for the drilling program, and now you're stepping out. There are 5 or 6 targets in the entire El Zorro project there. How do you see the chances of the company getting towards the other targets by the end of the year?
Yeah, very good. So our guys are just looking at an expanded drill program at TERNERA East. Obviously, we like to look at the material that came out of the first couple of holes there. We expect some more news around that hopefully very soon. Drone Hill, we're planning some holes there now. So we need to sort of resolve some of the geology there with some additional drilling. Obviously, we had a fairly positive drill result out of the first hole that was drilled there. And now that we've got this model and we've got a really good handle on, I guess, mineralisation geometry, we're able to use that as a guide, I guess, to go further north. And with some of the geophysics that we've done, combined with all of the other data that we've got, the team's actually planning a couple of holes right up at Torre Gordo. So we'd hope to be able to drill those over the next couple of months as well. So, you know, we're pretty keen to get holes into all of those targets. They're all mineralised at surface, and every time we've drilled one of them, the first hole's had a pretty positive result. So we see, you know, pretty huge scope there to add additional ounces going forward. But, you know, it's a bit like trying to eat an elephant at the moment. It's a big project and a big area to cover, obviously, and we've been pretty focused on getting a resource at TERNERA. We're seeing some really nice mineralisation in some of the holes coming back to the south that didn't make it into this resource. So we've got some more work down there to do as well. So plenty of targets to drill, plenty of news to come. And, you know, based on the current drill rate, we've got all of that to be able to squeeze into the next 6 months.
6 drill rigs running 24/7, that's pretty impressive for a small cap gold exploration company anywhere in the world. Certainly you just don't see that in this country. Is there any intention to increase that fleet of rigs, or you're happy with what you've got there in operation and operating cost effectively?
Look, at the moment, we'll stick with the 6. So as I said, we're looking at TERNERA East at the moment. We're probably going to flick a couple of them over to there to see where all that goes and get some information out of TERNERA East pretty quickly, while the other 4 rigs will continue some of the work at TERNERA. And then probably flick 1 or 2 rigs over to Drone Hill and Torre Gorda at some point in the not too distant future. And look, in terms of the cost, obviously that discovery cost is pretty low considering where we've come from in 18 months in terms of what was there. So our all-in cost for diamond drilling in Aussie dollars at the moment, which includes all of our geologists, contractors, all the support facilities in Chile and so on, is probably just a touch over $200 Australian a metre. So when you throw that back into, trying to do this in Australia, you're probably looking at closer to $500 a metre, I would have thought.
But there are some questions here regarding the timeline towards the development of, and from those shareholders who would like to be in this for an investment to production. What's your sort of idea on the timeline from this stage to a producing asset, Zeff?
Yeah, look, I think from day one, we've made it pretty clear that the people involved in Tesoro and put the company together are all, production backgrounds, and our underlying strategy is to take an asset through to production. And I think, the more work we do at our Zorro, certainly we can see a future mine emerging out of our Zorro. So, rough timeline at the moment is to get a scoping study done by the end of this year, hopefully sooner, depending on conversion of resources into indicated. And then an expanded resource as well that we could form the basis of a feasibility study on, which we'd move into next year. So normally it'd probably be a 12-month process to complete a feasibility study. We might be able to compress it. We've already started some of our permitting work to compress that time frame, but really, to get this into production, you're probably looking at another 3 years, I would say, dependent on, and the main time is permitting. So Chile is a fairly straightforward permitting process, but it does take time. So that's why we're starting a lot of that work early. And it's one of the reasons that we wanted to get a resource out as well, because we need to provide some conceptual size and scope type numbers to the Chilean government as part of that initial permitting process. And as soon as we submit those numbers to the Chilean government, they actually publish them publicly for public comment. So we couldn't have a resource floating around in the public being released by the Chilean government without us releasing something first. So now that we've done that, it paves the way for that, and we can start working on some of those permitting processes. But look, if everything goes smoothly, continue to build resource, have a positive economic study done at the back end of a feasibility, have no hiccups with permitting and so on, it's probably not inconceivable that you could pour your first gold out of a project here in, under 4 years.
And just to finalise this, in previous presentations, you've said that the board and management believes this has potential to be 100,000 ounce a year producing gold mine, and that's your target. Would you say that's after this resource and where you think it's heading, that's still on the horizon, Zeff?
Yeah, I think so. I think we can see a pretty clear pathway to a resource size that's able to support something like that. Whether the ultimate economic decisions made around a mine that size is yet to be seen. Obviously, if we can start to demonstrate that this is going to be a low-cost producing asset, then it might not even have to be that. We just see a highly profitable mine. But certainly with this as a resource base, and as I said, some of that material that we looked at with the drilling that we've done already certainly gives us a good idea of where to go with some of our drilling and continue to build that resource to get to a size to be able to support an operation of that size.
Thanks, Zeff. There's been a number of questions today. And I think Zeff's covered many of those through the presentation. If there are any that you'd like to ask further, please send them through to me, peter@nwrcommunications.com.au, and I'll pass them along to the correct person to answer. So thank you, Zeff, for your presentation today, and thanks for everybody who joined on the webinar. We look forward to bringing more news to you as soon as we can. Thank you.
Great, thanks, Peter. Thank you, everyone.